from the climate emergency to the energy markets being reshaped by the Iran peace deal. The Strait of Hormuz is reopening. Oil prices have fallen sharply from their wartime highs, but for Africa, where the energy shock hit hard, from fuel shortages in Kenya and Ethiopia to squeezed public finances across the continent, the question is not just whether prices are falling, it is whether the investment case for African energy holds, what comes next for Nigeria's oil sector, and how the continent positions itself in a post-war energy landscape. Daniel Pratt is Senior Vice President and Global Head of Upstream Solutions at S&P Global Energy, one of the world's leading energy intelligence organizations, which recently opened a new office in Abuja.
I don't think it does change the long-term investment case. We see upstream capital spending increasing more than 40% in Africa by 2030. Our forecasts are based on long-term fundamentals, not short-term price fluctuations. And industry investment programs are also based on long-term fundamentals. So I think the investment case is still intact and actually might even be more compelling post the Middle East conflict. I think as operators reassess above ground risk globally, they might find Africa a relatively more attractive place to invest. What the data tells us is that many countries, not just in Africa, by the way, are highly exposed to single sources of supply. So whether that's oil or refined products, and in an era where energy security is top priority, I think countries are going to have to think long and hard on how they de-risk that exposure in the future, either through supply diversification and or increasing domestic supply and refining capabilities. Really excited about our new office in Abuja. Sub-Saharan Africa is going to see the largest population growth globally in the next 20, 30 years. And that places Africa in the center of energy markets. And of course, that challenge of providing energy access overall. So it's not just an indication of the importance of Nigeria, but I think the strategic importance of Africa more broadly. So we look forward to strengthening our relationships in the region in the years ahead. In many, many ways, infrastructure investment is the key to unlocking energy potential across Africa. And in terms of price, yes, they have come down from the highs that we've seen as a result of the conflict, but we still expect to see prices relatively high on a historical basis and levels that we think higher than we were forecasting kind of pre-war. So it will take some time for flows and production to return to pre-war levels, but we think that investment case, again, fundamentally long-term is still strong. I think the last few months have been a great test case, right? I think Dangote has been a great example of the strategic importance of investing in refining. Without Dangote, Nigeria would have been kind of scrambling for refined product supply. With it, it was not only able to avoid those shortages, but it also played an important role in supplying some of the short markets in Africa and actually Europe as well. It's important to understand that this is not an either or choice. It's not oil or gas or renewables. I think utilizing the resource and the technology that makes the most sense is critical. And I think given the push for energy access, affordability, we think hydrocarbons continue to play a critical role and probably a dominant role for many years to come. But we also believe the needs and conditions of each country are unique. And I think there's room for all resource development.